Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
There's concern tonight the economic impacts of coronavirus will be more severe than the global financial crisis, as Wall Street suffered its worst single one-day plunge since 2008.
This is a day, if not of first, then of staggering proportions not seen since the height of the global financial crisis. Traders said that they knew things would be bad when they saw the extent of the oil price declines overnight.
The stock market could be headed for its worst week since the 2008 financial crisis. The Dow Jones Industrials, NASDAQ, and S&P 500 all fell more than 4% yesterday.
Sick of watching your money go down as a result of the coronavirus? Well, let me show you how to flip the switch from investing your money to protecting it.
Welcome to the only show in the country dedicated to helping savers worry less about money, the Worry-Free Retirement, with your host, best-selling author and fiduciary, Tony Walker.
January 30th, 2020. The International Health Regulations Emergency Committee of the World Health Organization declared the outbreak of something called the novel coronavirus, a public health emergency of international concern, it says. This virus, which nobody saw coming, is now in the public eye 24/7, with panic appearing to be set in the minds of people across the globe. The panic in this country, as evidenced by the client of mine who recently came in to say that he visited a very large grocery store in Louisville, Kentucky the other day and noticed that the entire stock of toilet paper had been wiped, no pun intended, clean off the shelves. It appears that it's infecting all kinds of aspects of our life, even our toilet paper buying. And while we would never downplay the potential seriousness of this virus, or any virus for that matter, especially the additional risks it poses to the elderly or to those who are, whatever reason, more susceptible to getting sick from a virus such as this, the subsequent panic of this new virus has sent the stock market and probably your 401k into a deep dive. So what does this all mean? And when it comes to your money, more specifically, what does it mean for your retirement? Now, assuming you have your money invested in the stock market, there's a question. Should you get in now or stay put? Should you sell or buy more? Surprisingly, though, these are not questions that savers should be asking themselves. These are questions left to those who I consider either investors or speculators. This is why today's show is going to show you how to flip the switch from investing your money and putting it at risk to protecting your money so you can predictably use and enjoy more of it while you still can. Well, welcome, folks, to the Worry-Free Retirement. I am that little man in the sweater vest, retirement planning specialist and fiduciary, Tony Walker, and today I'm going to help flip the switch on the simplest and most profound idea for savers, and that's moving and investing your money and instead putting it in protection mode. Folks, trying to invest your money and time the market, this is a fool's game. What we need to do is set a stage to better protect your money, which is a more prudent approach for savers. But first, before we get into today's show, I got to introduce America's favorite financial sidekick, Mr. Aaron Orander, along with his favorite sidekick, graphics and technical producer, Miss Megan Murphy. Okay, so here we are in the midst of a virus. We're recording this show on March 10th, 2020. We've never seen anything like this, as herds of people are rushing to buy up all the toilet paper. And now we have true confirmation from the general public that it must be in full panic mode, or at least that's what many in the media would want us to believe. But are people really panicking over this so-called coronavirus? Just yesterday and Monday in our offices on March 9th, I met in person with 30 people. That includes clients and couples. 30 people. Now, I asked him about this whole virus thing, and I said, do you seem worried or do you feel panic-stricken over this coronavirus? Now, again, don't get me wrong. Any virus is serious. We're not trying to downplay the virus. We're just asking normal people, are you worried about this virus? To which all of them replied, no. Now, the coronavirus, with these 30 fine folks giving their opinion of what to do about it, basically all came up with the same thing. Hey, we're not worried about it. We're going to take precautions, and we're going to wash our hands on a regular basis. Something my mom has been preaching since I was old enough to use the potty.
Wash your hands with soap, soap. Wash your hands with soap. And give a cheer.
All right, here's the point, folks. Things like the coronavirus will come out of nowhere. They always have. The unpredictable occurrences are part of life. And when it comes to the effects of these things on your money, who the heck knows? That's all the more reason that if you're a saver, if you're retired or nearing retirement, you got to flip the switch from investing all of your money in risk and uncertainty to protecting it. Why? Because as we are seeing right now, nobody can predict what the stock market's going to do. And I mean nobody. Again, as we record this show today, March 10th, 2020, we see all the winnings you might have made in the stock market this past year have now seemingly disappeared overnight. That's right. All of the gains you made these past 12 months in an instant are now gone, or at least on paper they are gone, which reminds us that all of this stock market and the values we keep hearing about are not real. I've said this time and time again, assuming you have money invested in the stock market, the money is not real. It's on paper. And it only becomes real when you sell that stock, pay taxes on that stock, convert that stock into cash, and walk around and spend it. So why all the fuss about a virus that is not near the level of what we would call smallpox, which fortunately has been eradicated? Why are so many people panicking, or at least that's what we keep hearing? How and why would people rush to stock up on toilet paper of all things? Why? Because they're fearful of a future they cannot predict and certainly don't understand. I call this fear the herd mentality. It's that phenomenon whereby if everyone says to do something, it must be right. If when somebody says that we should worry, we tend to worry. If someone tells us to live in fear, well, we have a tendency to live in fear. You know, I've never been one to follow the herd. Even as a kid, growing up in the 60s, you know what my favorite book was? It was called Artie the Smarty. It's a classic little children's book about a fish by the name of Artie, who always noticed that when one fish swam one way, all the others followed. Artie, on the other hand, decided that when all the fish would swim one way, he would swim the opposite way. Why? Because Artie knew that it was dangerous to always swim in the direction with the rest of the crowd, or in this case, a school of fish. Because Artie assumed they didn't know any better the direction to head than he did. Now, one of my books, it's actually called Don't Follow the Herd, and like Artie, I share my thoughts and insights on watching people over the past 35 years follow one another. People who tend to not really know what they're doing when it comes to their money. People who are told to max out their 401k to invest in the stock market, and you know what? They do it. They watch TV. They see the market going up. They see it going down. They decide to put all their every last nickel into the market, hoping that it will go up forever and forget that one day it could crash. So they assume now they need to get out, right? That's what people are saying. Do I get out? Well, all of this is a terrible way to try to live your lives and your financial future. And certainly, it's going to create a boatload of worry. Now, again, I'm not playing the severity of this virus. What I'm saying is that at some point, if you're a saver, you must view moments such as these, times such as these, as maybe it's time to flip the switch, to turn off the investment mode and turn on the protection mode. So how do we switch from investment mode to protection mode? Well, stay tuned. I'm going to show you how to do just that. You're watching the Worry-Free Retirement. I'll be right back.
Attention 401k and IRA owners. If you've experienced a 20% loss or more in your retirement account, contact Tony Walker now. With tax rates at an all-time low and the stock market in a free fall, don't miss this unique opportunity to see if Tony Walker's 401k planning strategies are right for you. Act now. Call the number on your screen or log on to TonyWalkerFinancial.com and let's get started.
With all the talk about the coronavirus and the fear and panic of this virus killing millions of people and becoming the next smallpox, it's interesting that when it comes to retirement, article after article reminds us of the biggest worry of retirees. And it's not dying from some virus, but rather America's biggest fear is running out of money in retirement. When polled, most Americans fear running out of money more than they fear death. So while I can't predict the next stock market crash or tell you whether now is the time to buy more stocks or sell what you got, nor can I assure you that by washing your hands every time you go to the potty will keep you from contracting the coronavirus, I can show you how to guarantee that you won't run out of money. So, if there was a way to overcome the greatest fear of all, running out of money in retirement, wouldn't you want to know about it and just how we do it? Of course you would. And it's something I provide my clients each and every day. It's a vaccine for reducing worries over things you can't control. It's called the Split Ira Concept. Now, we've talked about this concept, but given the fact that we have a stock market that's very, very much down, this is a great time to remind people of what we do. You know what? Right now, Tony Walker and Tony Walker Financial is not panicking over this recent stock market downturn. The vast, vast majority of my clients are not panicking because the stock market has gone through a major correction. Why? Because of this. So let me explain again how the Split IRA works, how we've culminated years of study on this, and why savers love this concept. Now, again, it can be a little different than this. We can modify this some, but in its simplest form, we like to describe it by using two simple buckets, all right? Now, by the way, even though this is referred to an IRA, obviously we move a lot of 401ks. We put a lot of 403Bs into this type of planning. Maybe you have a lump sum pension. We could roll that in here, but it can actually cover any type of item. For instance, I'm having a lot of people who are starting to receive inheritances, and we're doing this same method. I have people that have money languishing in the bank that's already been taxed. You could do this same method. You might have an old annuity, maybe an outdated annuity. You've got an old brokerage account that people are charging you too much in fees and there's no written game plan on how to use and enjoy it. We could do the same thing. So it's not just IRAs, but predominantly this is where we use it. Okay, so how does this work? Basically, let's imagine we have a couple $100,000 and we're going to split it up. The first thing I like to do is find out how much what we call liquidity and immediate income someone's going to need. This is the first thing out of the box and what a retirement specialist should be doing. If they're not asking about income needs, they're not a retirement specialist. They're just peddling something. They're just trying to strike up conversation and sell you something. We have to understand your income needs and things you might need money for. That's what the Charles Schwab bucket is all about. Again, the Charles Schwab bucket is for immediate access. The fees are very, very low. We only charge 0.8% to manage that bucket, and we do everything. If you need income, we set that up. If you need a withdrawal out of the blue, we'll get that to you. We link that to your checking account. It's available immediately. Most of the assets we put in there have no transaction fees, no commissions, no gimmicks, okay? This is a great way to have money available for accessibility. Now, there's 5 portfolios. I'm not going to go into those in details, but we have some people, we'll talk about this in the next segment, that want to put a little bit of risk in that bucket. So we'll put more in the stock market in this bucket. Now keep in mind, in this example we're talking about, we may only have $40,000 or $50,000 in this bucket. So even if it has some money in the stock market, you say, well, what happens to the balance? Where did that go? That goes into our other bucket where we use fixed annuities, fixed interest and fixed indexed annuities. Well, why do we put annuities in that second bucket? Because we don't want any risk. We don't want the possibility of that money going down because we will drain this bucket out. There will be a point in time where we're going to encourage you to spend that money. That's what the worry-free retirement's all about. That's why we're so different. We actually want you to use and enjoy your money before it's too late, but we don't want you to run out. We're back to that greatest fear of Americans, running out of money. the annuity folks. As much as Wall Street tends to say that they don't like annuities, the reason they don't like them is they don't sell them. That doesn't make them bad. The annuity is not a securities product. It's an insurance product issued by insurance companies, and its purpose is to protect principal. I call it mailbox money, and then to eventually, if you want us to do this, send you a lifetime income that you can never outlive. So if you're sitting here thinking, well, Tony, yeah, I'd like to see about this split IRA. I have money languishing in the bank. I'm going to be getting an inheritance or just received one. I got to roll over my 401k. I got to decide if now's the time to do it or wait, whatever. Let's sit down and talk about this split IRA concept, and let me show you how easy it is for us to manage your money, not so we can just stockpile it one day and die with a bunch of money, but so we can use and enjoy it while you still can. To find out more about the Split IRA or meet with me in person, just log on to TonyWalkerFinancial.com. I'd be happy to assist you in any way I can. All right, we're going to talk about the concept of a pie. How much money should a saver really consider putting in the stock market? How come Tony Walker's not worried about this recent coronavirus? And how can we lay out your money so you can feel good about the amount of risk you're taking, but also the amount of money that's protected? We're going to flip the switch again, but first I got to get out the big boy. We're bringing in the old whiteboard. Aaron, bring that thing in. You're watching the WorryFree Retirement. You stay tuned. Have you recently retired, been laid off, or offered a pension buyout? Has the company you work for moved, been acquired, or closed its doors forever? And finally, do you have a 401k with a previous employer you'd like to move to safer territory? Then take advantage of this opportunity to move your 401k or lump sum pension to Tony Walker Financial. Let's meet in person to discuss your retirement options. Log on now to TonyWalkerFinancial.com to schedule your free, no obligation appointment. Let us help you today. Do you like pies? I love pies. My mom does a really good strawberry pie and a chocolate pie, and I once was kidding around saying, hey Mom, instead of just making a chocolate pie and a strawberry pie, why don't you just kind of mix all that up together? Maybe part of it be chocolate, part of it strawberry. And she's like, well, that's not going to work. Well, that's kind of the way with money, folks. There is a one-size-fits-all mentality out there that when you're in a 401k, that people think you got to be in the stock market, that you need all chocolate pie, that you can't divide it up. And this is totally ludicrous. So what I'm going to do is share with you what would happen if we divided up the pie differently. Remember, we just got through talking about our split IRA concept, so we can diversify things so you can have your pie and eat it too, so to speak, versus what I just ran into the other day with a gentleman that had 100% of his money, still does, in his 401k in the stock market. So we're going to imagine $300,000 is with the investor and $300,000 is with our split IRA concept. So this person has 100% of their money in the stock market, and we're going to imagine, just for the heck of it, we're just postulating here. Remember back in 2008, the market went down, depending on where you had it, anywhere from 37 to 50%. So let's just say we're in a downward spiral here, and over the last year, the stock market has gone down, let's say 30%, depending on where they had it. So 300,000 at 30%, that means this person's account on paper, remember, it's not real. This is not real money. It's funny money. Real money doesn't become real money until it's converted to cash and use. So on paper, a year ago, this person had $300,000, and now, after a $90,000 loss, they have $210,000, and they ask me, Tony, what should I do? Well, as a fiduciary, it's hard for me to say, well, why don't you get out now? I mean, that's a $90,000 loss. And this literally did happen the other day. I said, I think we're going to have to stay and hope this thing comes back. That's too much of a loss to move. But irregardless, they thought they had 300. Now they only have 210. That's the facts as we have them. But what would have happened? Let's walk over here. If instead we had put this $300,000 in the split IRA, okay? And in this example, we had chocolate pie and strawberry pie. What I did in this example, I divided it up originally. We only put 30% in the stock market and 70% in what we refer to as a fixed indexed annuity. No risk whatsoever. So again, 70% in the annuity, and that's not going to grow a lot. They're not meant to grow 40 and 50%. That's not what we're trying to do here. Remember, we're flipping the switch from investing to protecting. But we did leave 30% here in our Charles Schwab platform. Now, here's what's interesting. They chose what's called our moderate growth, which has about 60% in the stock market. So, but it's only 60% of the 30 because 70% is not in the stock market. So let's do the math real quick. So that means they had $100,000 in the Charles Schwab platform. You with me? 60% of that 100, or $60,000, was actually exposed to the stock market. The stock market went down 30%, so we take 30% off that. So their losses with our split IRA, $18,000 versus $90,000. Now, I don't know about you, that's not sleep insurance, folks. That's some sleepless nights. This is what we call sleep insurance. The idea is when you go to bed at night, instead of waking up and seeing the market go down 2,000 points or whatever it went back on March 9th, you look at it and you go, okay, yeah, I did lose some money, but the brunt of my money is totally protected. If this looks like something you're sitting there saying, why doesn't anybody share this kind of stuff with me? How come I'm out here playing 100% game in the market here and something that I truly don't understand that has all this risk? Then why don't we consider this called the Split IRA concept? Let's put that up full screen again, and let me show you again how this works. The Split IRA concept, what happens is you and I would sit down in person. When we sit down, I'm trying to understand, number one, how much risk you're willing to take, how close you are to retirement, or if you're already retired, what your current income needs are, how much you want to leave when you die. All of these things go into planning your retirement, and somebody has to be well trained in this. Folks, I've done this for 35 years. I know this world really, really well. And what I always start off with the premise is, why do we need to take all this risk if we don't have to? The reason you think you've got to take all this risk is you do not have a written game plan. That is something we provide all of our prospective clients at no charge. So if you'd like to meet, get a second opinion, get a written game plan of your situation, and see how we divide up the pie to give you some better sleep at night, just log on right now to TonyWalkerFinancial.com. Once there, you're going to click on that Let's Get Started button. That information is confidentially sent to our office. You will be contacted. You and I will either talk by phone or meet in person. Again, that's TonyWalkerFinancial.com. Well, does the Bible say anything about death and following the herd and being fearful of things and running out and buying too much toilet paper? It really does. It's got some good news, folks, and it's going to show you in this next segment how you can stop worrying about things that are out of your control. Good stuff coming up. You're watching the Worry-Free Retirement. Got to get me a cup of coffee. I'll be right back. Who can you trust? It's one of the most important decisions you'll have to make. Question is, are you ready? Well, we're here to help at Tony Walker Financial. You know, we care more about you than we do your money, and we have over 2,000 happy clients and an A+ rating with the Better Business Bureau to prove it. Rolling over a 401k, confused about Social Security, maybe you're afraid of running out of money. Learn how to use and enjoy and protect your hard-earned money. Log on now to TonyWalkerFinancial.com and let's get started.
Worried about running out of money in retirement? Then download Mailbox Money for Life from best-selling author and retirement planning specialist Tony Walker. Just log on to TonyWalkerFinancial.com. That's TonyWalkerFinancial.com.
There's an old saying that goes something like this: a man is not ready to live until he is ready to die. Do you believe that? Do you believe that you cannot truly enjoy life unless you accept the fact that one day you will die? Well, I do. I believe this with all my heart. To me, by accepting the fact that one day I'll be dead and gone gives me a reason to live while there's still time. Some people ask why I still spend so much time seeing so many people when I don't have to. My response, because time is short and I want to. As we have seen by the introduction of the coronavirus and the plummeting stock market, Life is unpredictable, and so is the amount of time you and I will have on planet Earth. Knowing this should give us a sense of urgency to do the things we can do now before it's too late. Urgency to spend and enjoy our money while we still can. I recently addressed this life and death subject in my best-selling book, Live Well, Die Broke. In it, I remind readers that money is simply a temporary tool for a temporary journey, and that in the end, whether you've got $1 million in your 401k or just a few bucks in your pocket, we all die broke. All the money in the world can't stop death. And in reality, how we die, whether by a virus or by some other causes, is irrelevant. Now certainly, this whole view of life and death would be depressing if in fact you thought that this was all there was to life. All it ended in was death. It was over. If you and I believe that there is nothing after this life, we do in fact now have reason to truly fear death. With this take on life, we are going to probably be more likely to follow the herd and run to the grocery store and stock up on toilet paper when all is lost. We'll see panic in others and assume that we should be panicked too. So let's assume that people do fear death and don't believe that there's any hope after we die. That is bad news indeed. But what if I told you that there was a way to overcome death, that in the end you and I have nothing to fear and no reason to be led astray so easy by the rest of the herd? Well, assuming you're a follower of Jesus Christ and you know that through Him death has been conquered, you know that the sting of death, this thought of death, is gone. There's no longer anything to fear in death. In fact, my Bible teaches me that as a result of Jesus' death, you and I now have eternal life. As a result of His resurrection, which, by the way, was witnessed by hundreds of people, we too can be resurrected and spend eternity with Him. That's pretty good stuff if you ask me. Pretty good news. Yet some people will view this as foolishness or rubbish. You know what Jesus says to this? In Matthew 7:13, He says the following: "Enter by the narrow gate, for the gate is wide and the way is broad that leads to destruction, and many are those who enter by it." In verse 14, He goes on to say, "For the gate is small and the way is narrow that leads to life, and few are those who find it." You know what I think that is? I think He's talking about that gate being death. We all die and we all know it. And we can either enter by the wider gate and do what everybody else is doing, or we can step away from the herd and follow Christ, avoid death altogether, and enter by the narrow gate. The one that nobody seems to be going through, but like Artie the Smarty, is actually the right gate. He is the gate, and He has overcome death. And I think He's inviting us to get up and walk through that one. Well, how about you? How do you feel about your money? How do you feel about the way you're following after everybody else? Are you panicked about your money? Are you nervous? Are you getting sick and tired of worrying about what everybody else is doing and telling you what to do with your money? Well, how about this? Why don't you take advantage of us just sitting down and talking? Let me share with you how the worry-free retirement might be exactly what the doctor ordered. Now, to get started, it's easy and, quite frankly, very simple and free to do. All you do is log on to TonyWalkerFinancial.com. When you get there, just click on that Let's Get Started button. We will contact you and arrange either a phone call between you and I, or if it warrants, I'll meet with you in person at either our Bowling Green, Louisville, or Lexington, Kentucky offices. Do it today. Log on to TonyWalkerFinancial.com. Well, that's all the time we have today. Next week's going to be pretty cool. The last of our Flip the Switch shows. This one on how do we go from saving to spending. Very good stuff coming up. But you remember, between now and next week, if all else fails, you be worry-free. Make it a good one.